Thank you for joining Jennifer Strauss and Associates in our 2019 Webinar Wednesday series. We are coming to you live from downtown Washington, D.C. Our webinars are every Wednesday and today, Tuesday, and you can find the upcoming schedule on our website. Past webinars and all recordings are also on our website and on our YouTube channel, along with over 160 other recordings on federal contracting topics. All are complimentary. If you have questions for our speaker today, you can email her directly with the contact information you'll see on the last slide. Right, this is just a little bit about us. We are a Washington, D.C. based firm and provide services to federal contractors. This ranges from market analysis reports to proposal writing and also post-award compliance. More information is on our website, so please visit us there. We do offer advertising in our newsletter, so you can reach out to this email if you'd like more information on that. All right, let's go ahead and get started. Our speaker today is Mary Beth Bosco. She's going to be covering top issues for government contracts, M&A. Thank you for joining us today, Mary Beth, and I'm going to go ahead and hand it over to you.
Sure. Thank you, Mallory. As Mallory said, my name is Mary Beth Bosco. I'm with the law firm of Holland and Knight, and one of my specialties is working on transactions that involve government contractors, whether they be purchases or financing of companies that do business with the government. So can we go to the next slide, Mallory, please? What I'm going to cover today are really the 5 trending issues that we see in transactions involving government contracts. These will be sales of single contract vehicles, the GSA price reduction clause, organizational conflict of interest issues, IP issues, and then what happens if something that may require mandatory disclosure to the government is first discovered during diligence. What we'll do for each 5 of these topics is to just provide a quick overview of the regulatory scheme and then present a number of issues and considerations for both buyers and sellers. So if we could go to the next slide, please. We have seen a huge increase in companies purchasing from each other multiple award IDIQ contracts, such as the Oasis contract or the Eagle contract or Alliance. Because of this increase, contracting officers have become increasingly rigid about approving these transactions. These are asset sales, and therefore there has to be a novation that needs to be approved by the contracting officer. Many of the large government-wide acquisition contracts have their own process for approval of these sales. In fact, one of them, for example, requires contractors, the purchasers, to submit a self-evaluation and qualify to be able to purchase into this program. Typical problem areas that we see when we're doing these deals are: what's the description of the assets being transferred? For example, in some cases, there is no work on the IDIQ contract, and the seller wants to get rid of it. The buyer wants to purchase the contract because the buyer believes it can market the contract and get some work. Contracting officers typically will not approve the sale of what we would call a blank contract. They want to see assets actually being transferred. So how the parties describe what is being purchased is very important. Typically also the government will want to see at least one employee transfer, and many buyers and sellers have not contemplated this as part of their deal structure. We have been able to convince COs to approve these transfers using maybe a seconded employee for a period of 6 months. But if you are contemplating entering into one of these GWEC sales agreements, you should be thinking about how, whether any employees will transfer, will you be able to say that some laptops or other equipment will transfer? What about things like goodwill or a website, and be prepared to have a pretty fulsome list. More and more, we've also seen contracting officers ask for a justification for the sale and an explanation of how the pricing of the contract was developed. This has been sort of a source of more recently, these topics have arisen. So again, you need to be prepared with the responses to those questions. Another issue is, it used to be back in the old days, a novation required the party seeking the novation to talk about the capability of the purchaser to perform. And quite frankly, that used to be a paragraph in a cover letter to a novation request. These days, contracting officers are asking for more and more detail about the purchaser, about its financial health, and how its ability, how it will be able to keep performing the contract. Can we go to the next slide, please? So we've covered most of these, but to summarize, when you're talking about purchasing a single contract, there are some questions that you really need to ask off the bat. For example, are there special processes for the particular GWAC in order to sell them? Or are there, as in the Alliant contract, a prohibition on one entity holding more than one Alliant contract? What happens if both the purchaser and the target company have Alliant contracts? What do you do? What about size considerations and 8A eligibility? In other words, you really can't purchase an 8A vehicle unless the purchasing company is an 8A as well. And make sure you understand the rules governing whether or not you're going to be able to bid on new task orders under these contracts. Next slide, please. The second topic that, before we get to the second topic, one of the other issues you need to think about is who's going to submit proposals during the period between the acquisition of the contract and the novation by the contracting officer. And there have been some GAO cases that say, because right after the sale, it was apparent that the transferee did not intend, the company doing the transferring did not really intend to perform the contract, but it had its name on the contract. It didn't have standing to submit a protest on one of the task orders. So items like how do we fashion our asset purchase agreement and any other documents to cover who will be performing and who will be preparing proposals during the interim period. Next slide, please. The second topic we want to talk about in terms of, these are issues that can trip up a transaction, is compliance with what's called the price reduction clause in GSA contracts and the schedule contracts. So basically, these require there to be a basis of award customer against which sales to the government are always compared. So there is the contract initially establishes the basis of award customer or customers, and the government sale under the GSA contract must always be at a lower price than that which is received by the customer of comparison. And the discount relationship between that customer and the contractor, and GSA and the contractor must always remain constant, or if it changes, GSA must be given a similar or better deal. Next slide, please. It is remarkable how often this becomes an issue close to closing. It almost always comes up in diligence and requires attention. So, you know, when a seller is preparing its data room, it really needs to ask itself, do we have all the initial and renewal contract correspondence? Because a lot of these contracts, as you know, have long durations. It is important. Many companies do not recall who their initial basis of award customer is and may not have the documentation still in its file. You will be asked questions like, okay, so how do you comply with this clause? How do you flag relevant sales to make sure you are in compliance with the PRC clause? And what's your process for internal audit? So you need to have all of those answers lined up really optimally before diligence starts. Next slide, please. Just as importantly, the buyer needs to ask things like, are there GSA audits? What volume of sales go through the schedule? So, for example, it may be a low risk if there are very few sales that go through the schedules. I've also seen cases where it turns out that the labor, for example, that is sold under the schedule is very different than the labor categories that are being sold to commercial customers. And again, that's something that will reduce the risk of non-compliance. Another issue that comes up is who exactly is a commercial customer for purposes of comparing government and commercial sales. It is important to remember that even if you sell to a prime contractor who is selling directly to the government, that prime is considered a commercial customer, even though the government winds up being the end user. So that's issue number 2 that very often can delay or blow up a deal. Next slide, we'll go to issue number 3, which is the organizational conflict of interest provisions. So an OCI occurs when relationship or activities or contracts mean essentially that a company can't render impartial assistance or advice to the government, or can't perform the federal contract in an objective way. Now, if there's an OCI, a company has to have a mitigation plan, and that plan may prohibit the contractor from bidding on future awards. So obviously this is an issue that is very important to revenue stream. Next slide, please. The typical ways that OCI
Hello. I'm hoping I'm back into the program. For reasons I apologize profusely. My computer just decided to stop working. I think I was talking about OCI clauses, and I will go back to that. Here's the story. As we were saying, an OCI clause can cause you to not be able to bid on future work. Depending on the breadth of the clause, it might mean that just the target can't bid, or it might be broad enough to cover the corporate family. Classic examples are things like if a company helps the government prepare specifications, obviously it cannot bid on the contract that's being, any contract arising from those specifications. The difficulty is identifying OCIs prior to companies actually the transaction being closed, so you can really look at and compare the two portfolios. So again, this is something that both buyers and sellers need to be very conscious of as they go into these transactions. Next slide, please, Mallory. The fourth issue is intellectual property rights, particularly when a company with valuable rights is on the market. The buyer is going to want to know whether or not it's actually getting the intellectual property it believes it is buying. And by that, I mean it's going to want to test the seller on how the seller protects its IP under government contracts. Because the basic rule is that if the government gets to pay for something or pays for the development of IP, it gets very, very broad rights to use the IP. In most cases, it does not get title, but that's almost irrelevant because it does have the ability to use the IP and to have others use it as well. So a review of the clauses in the contract is necessary, and the company should be prepared to answer questions about how it as a company protects its IP, and also to know when the government has access to or title to IP. Again, this is an issue that is one of those issues that comes up, and you never quite know if it's if it's one of those things that will either impact the pricing of the deal or will impact whether the deal goes forward as well. And then finally, last, the last topic is probably the biggest topic, which is what happens if you discover something, an issue that requires disclosure in the middle of a deal. The seller, for example, is preparing the data room and in reviewing the documents finds an issue, or the buyer identifies the issue. This really becomes a deal issue with the things that need to be considered are who's going to investigate here? Is it the buyer or the seller? Who's going to make the disclosure here? Is it the buyer or the seller? Can the exposure be quantified, so perhaps you can sort of wall it off and put it in an escrow? Or is it a larger liability, let's say, involving perhaps the False Claims Act or False Claims Act allegation? In some cases, you will see deals just go away as a result of that. In other cases, you will see perhaps a pause in the deal while the target makes a disclosure and see if they can resolve it with the government in order to in order to go forward with the deal. All of this takes drafting, pretty careful drafting during the process. Perhaps there can be some indemnification or an escrow. So these 5 issues are the ones you need to prepare for and understand fully in, the best of all possible worlds before even starting discussions relating to the purchase of a government contractor. And I think I am over. And again, I apologize for the technical issues. I just can't explain why my computer decided to die. So thank you very much.
Thank you, Mary Beth, for joining us today. If you have any questions for her, please feel free to reach out to her at the email or phone number shown on your screen. And this concludes the webinar. Thank you.